Hello, everybody. Good morning, good afternoon, and good evening to everyone from a welcome diversity of time zones to this e-MFP webinar to present the pre-publication findings from the recently conducted COVID-19 Financial Inclusion Compass. People are joining rapidly, so I think we'll get started because we've got a lot to go through. I'm Sam Mendelson. I'll be presenting today, and I'm joined by Mayada from CFI. Before anything else, a little bit of housekeeping. Because we've got a big audience today, everyone is going to be muted as an attendee, but we'll have plenty of time for questions and comments in the second half of the hour. So please do type them in the Q&A tab of Zoom. My colleagues and I will be going through them, and then I'm going to read out, and either I or Mayada will try to address them. If you have questions, please indicate who they're to and try to be as specific as possible. And we welcome comments as well, particularly on to what extent what you've heard today tallies with your own experience. There is also a raise hand option. So if you would really like to speak your question or to make a comment, then do so, and we'll try to get to you to unmute you at the end. So the running order today, this is a huge project, the Compass, and with lots of data and comments, and there's more than we could really cover in just right now. So if you miss something, this session will be recorded and it'll be available to watch on YouTube, and the slides will be available on the e-MFP site. And of course, the paper itself will be published in the coming days. So let's dive in. This is what we're going to cover today. A little bit about the Compass and the rationale for this special edition. The background to the Compass series, a bit about the methodology and the respondents, the challenges and priorities, concerns and opportunities section, some of the forecasts and overall themes that can be extracted. Then I'm going to hand over to Mayada El-Zoghbi from CFI for her response. And then we should have a good 20-25 minutes or so of Q&A at the end. So a little bit about the Compass series. I've been the lead author of this series since 2018. I want to, by the way, welcome Mayada. I didn't do that yet. She probably needs no introduction as the Managing Director of the Center of Financial Inclusion at Axion. And as well as being a good friend of e-MFP, she and CFI partnered with us on the development of the COVID-Inclusion.org essay and discussion platform, and she has given invaluable feedback on the early drafts of this Compass survey before it went live. A little bit about the Compass. It started in 2018, and the idea was to build on the kind of debate that e-MFP always generates at Microfinance Week, and with its unique position as a network and an honest broker, to start a series that would capture different ideas from different stakeholders, and year to year to be able to look at iterative changes while also retaining core questions so that there can be a longitudinal value there. We did it in 2018. And then in 2019, with some new trends, a more sophisticated look at new areas of focus. And then COVID-19 happened. And the idea was to have continued in the same vein this year. But several months ago, like many infrastructure organizations, e-MFP we were trying to work out how we can best add value to the sector's response, to be constructive, to not get in the way. This was a common sentiment among infrastructure organizations, as we'll see later. And so we thought that what we do is move the Compass much earlier, really start from a blank page and leverage e-MFP's unique network with all types of different sector stakeholders to put together a picture of which different players see as the challenges now, the priorities in the medium term, the longer term concerns, opportunities, and forecasts. So we ran the survey in the second half of last month, and we put together the paper in only a couple of weeks, and it will be published soon. And that is the cover. So who took part? As I said, it was open for 2 weeks in June and available in 3 languages. There were 108 complete responses. We can talk later in Q&A if about what complete means. That was the distribution by language, and they were from 44 countries. These are the top 20 in terms of their representation. As you can see, there's a mix of the European countries where many e-MFP members are based, and also several markets where the FSPs are based, microfinance markets too. Respondents could choose, as before, for their comments to be attributed or not in the final paper. And it had two sections. Section 1 had two parts. In the first, it was challenges. And there were challenges that were facing clients, facing FSPs, funders, and others. And respondents had to score these challenges on a scale of 1 to 10, or I don't know, 10 being the biggest challenge, 1 being a very modest or non-challenge. And they were invited to add comments to each of those. In the second part of section 1, it was priorities. And this looks not currently, but into the medium term. So 6 to 12 months down the track, what are the priorities for FSPs, funders, and the like? And again, same scoring system. And in section 2, there were 3 open-ended questions on concerns, opportunities, and forecasts. These were optional. So let's break down the respondents a little bit. Here you see that a plurality, or a third of respondents, were practitioners, followed by consultants and support service providers, funders, infrastructure organizations, researchers. This is a fairly similar distribution to 2019 and 2018. Here's the distribution by the primary geographical focus of work. And again, a plurality focused globally, and then sub-Saharan Africa. And this is a very similar distribution to we've seen before. Worth noting that for many respondents, they work in several different areas. So some of them were responded as globally, and some of them only as their primary area. So I'm going to go through the 4 challenge groups and the 4 priorities groups now for a breakdown of what respondents thought overall, and then disaggregate them a little bit by respondent type. Here we have challenges facing clients. A couple of things. In the top right, in the red, you'll see the actual question that was put to respondents. And then on the left, you see terms. These were accompanied by an explanatory note with fairly carefully crafted definitions of each. I've not included them here. There's no time to go through them all. They will be available in the paper so that you can see what respondents were told that they mean. So let's break down the data a bit. Respondents rated financial pressures clearly the most pressing challenge facing clients. It was a full decile above immobility, and it was rated top by all respondent groups. These can be contrasted very strongly with illness and incapacity of clients, which you can see at the bottom. This bolsters the thesis made in the comments that it's not the health crisis per se that's the biggest threat to clients, but the acute and longer term financial consequences of the pandemic and income pressures on households. FSPs were the main respondent group who rated financial pressures the highest. This is to be expected considering their close vantage point to clients. So let's look a little bit at the comments and a couple of the challenges as examples. So financial pressures on clients. The drivers of this, respondents believe, are primarily low sales in businesses, inability to reach their customers, commodity prices, and increases expenditures for businesses, including sometimes health protocols being introduced. But there is a consensus that it's loss of income that's the main driver. Interestingly, there were several examples given of how not all clients are losing out. It depends on the sector, and examples of how some clients have found new ways to generate income to compensate, in fact. Inability to access new credit, another one of the top challenges facing clients, also had a lot of discussion. And I've included this particular quote, and I'm going to read it in its entirety because I think it captures well the catch-22 in which FSPs can find themselves. Clients need to have cash flow to show they're able to repay the loans they're asking for, but their businesses are not performing as expected, so giving fresh loans is risky. The instinct will be to refinance old clients for FIs, but most of the loans have been rescheduled, but clients still need money to keep their businesses running. So clients who are diligent in the repayments can be considered for refinancing, but the ability to access new credit is low. We can come back to that more later, and there's a lot more on it in the paper. Moving on to challenges facing FSPs. Client repayment here was the top challenge facing practitioners, and it received the second highest score among all challenges. It was high among all respondent groups, although FSPs and TA providers, the two groups who work most closely with clients, rated it lower than others did. Macroeconomic context was in close second place and also far ahead of third spot. There were big differences. If you look to maintaining client protection and social mission in fifth spot, there were big differences between respondent groups. Practitioners and funders rated this very low, and others and consultants and support providers rated it very highly. Perhaps surprisingly, both practitioners and funders rated human resources management very low. Little breakdown of these challenges. So liquidity constraints has dominated debate in the sector so much for many months, and I think it's clear why, but it was only in third place here. A lot of the distinctions among respondents were between deposit taking and credit only. Most see the liquidity constraints as more severe for deposit taking institutions because it's less about providers' needs to meet operational expenses or debt repayments to increasingly flexible funders, but clients withdrawing savings. Client repayment was top, as I said before, but the comments actually suggest this is more of a potential than a current challenge. And overall, they thought that we're too early in the crisis for genuine incapacity to pay to become widespread yet. Let's move on to challenges facing funders. Informational and operational challenges was clearly the top. Looking at what funders themselves rated the challenges facing funders, they also agreed that that was top, but with a comparatively low score. And interestingly, overall funder respondents appeared more concerned about the challenges facing investees and end clients than they did the challenges facing themselves, perhaps understandably, as those effects on investees necessarily flows up to funders. Another anomaly maybe is that financial losses for funders was rated extremely low by funders, a full standard deviation lower than anyone else did. So the question is, what do funders know that everyone else doesn't? Do they not foresee considerable losses, or they do, but they foresee that they can be absorbed? That's not clear from the score or the comments in this section. On informational and operational challenges, there were clearly differentiated impacts. It's especially an issue for investments in new partners, those without a long-standing relationship between funder and investee. And broadly, respondents thought that the limited ability to assess risk is likely to affect more newer FSPs that receive little to no funding from international investors or have not been assessed in person prior to the crisis. This makes sense. The financial losses for funders, most respondents thought, and these are a couple of examples here, but the losses will be fairly short term. Longer term, it'll really depend on the overall stability of the institution in question before COVID hit. On the funders' inability to meet investors' needs, there was a strong consensus that this really applies most of all to non-financial support than to debt or equity investments themselves. Moving on to challenges facing others, the takeaway here is that fieldwork is far and away the biggest challenge facing researchers, TA providers, and the like. Demand decreased. This means demand for services by these entities to FSPs had the highest variance. And the obverse is true as well, that demand increased was low among those who need to do it, infrastructure organizations and consultants, for example, and was higher among funders. So yes, fieldwork was the greatest challenge, and the biggest challenges are in delaying or managing fieldwork remotely, ensuring quality control, dealing with poor connectivity, and TA providers in general believe there's really no substitute for face-to-face interaction. And demand decrease really does depend on the work. Certain areas of services, risk management, liquidity management will be higher, and that there are knock-on adverse effects, including on lack of resources to training. There were several, though, who saw this as an opportunity to work more with local partners and focus in the future more on in-person visits that are really necessary. Moving on to priorities for practitioners. This is a big list and there's too much to read here. It's obviously available in the full paper, so I won't go item by item here. But expanding digital finance was the top for all categories except for researchers. Researchers also maintaining collections where possible, very, very higher. And when we actually dig down into the top one, for example, several people see this as the continuation of an existing trend. This has obviously dominated debate in the industry for years, the rollout of digital financial services. It was the topic of the European Microfinance Award that we ran last year. These are fairly typical comments. It was happening anyway, but this has probably catalyzed it because of the need to the move to contactless, inability for to convene groups and the like. But while respondents were very bullish on digital in the opportunity section, here generally they were more circumspect, saying that it remains high cost, there are client protection issues, it takes too long, and cannot be done from scratch in 6 to 12 months period, for example. Priorities for funders. I won't spend a lot of time on that now, and there wasn't a great deal of distribution among the scores, but among the comments, there really is a trend of cooperation that was welcome among investors in particular. Several people observed that, and it was discussed in a very positive light. On priorities for regulators and policymakers, again, digital, top priority for respondents, this time in the notion of promoting the use or expansion of digital services and branchless banking. There are several other trends that we could pick out there, but they're best left in the paper. And then the final priority section was this, and it was for all of the support ecosystem organizations. The biggest priority is researching impact on clients. And this was especially high among those that do it, researchers, infrastructure organizations. And with that, I'm going to move on to what was in section 2. There were 3 questions here, and literally thousands of words and hundreds of contributions in aggregate. There's no way to extract all of the messages, but here are a few on the concerns. Respondents primarily are concerned about the impact on clients, not on providers or funders or TA providers. There is a real concern about how to maintain client protection when this is over among the remaining FSPs, because there is a belief that many will go bust. There is continuing uncertainty due to the macroeconomic trends, especially how those affect trade and tourism and transport. There was a sad possibility here that was said by several respondents, but I put a quote at the bottom, and that's of a sad outcome of recession causing regression. In other words, the achievements of the last decade on product diversification and design and client centricity and client protection are risk being undone. I fear that the whole sector will go back to the 1980s with straight up and down loans, little customization, less listening to clients. But it's not all doom and gloom. On opportunities, respondents saw various. There is the possibility that the recent collaboration and cooperation in the sector will be permanent and lead to increased efficiencies. Consolidation generally is seen as a positive thing of providers, support organizations, because it reduces duplication and separates the wheat from the chaff. There is the opportunity for better delivery of non-financial services, new innovations being catalyzed in branchless and digital banking, use of agents, better insights into clients' needs and responses to this crisis, and a rethink about the sector's purpose. This is a more nebulous concept, and Mayada has said it elsewhere, the building back better. Maybe when all of this is past, that what's left may be stronger in certain key respects. They were also asked to make forecasts for a post-COVID sector, and there were a lot here. One is that there'd be leaner, greater professionalism among FSPs. As said also in opportunities, consolidation is a forecast, a neutral prediction as well, with survival of the fittest mentioned, that longer standing FSPs with diversified funding sources survive, grassroots cooperatives struggle. But what does that mean for client protection if it is indeed the more socially focused social mission organizations that struggle, while those that are more what used to be called single bottom line financial first do endure? There's the possibility of more flexible regulatory responses on forbearance, moratoria on loans that have been tested, rolled out quickly here, and that we can understand better how regulators can and should respond to crises like this quickly. There will be, some said, a need for more protection of clients in product design, and especially in non-financial services that specifically respond to future outbreaks. There is the likelihood of expedited digital transformation of MFIs, as I said earlier, and possibly, and some would say sadly, an accelerated decline in the existing trend of moving away from group models. So I put together about 10 overall themes, and this is where I'm going to wrap up and hand over to Mayada. This is a huge paper, and I hope that many of the people on this webinar will read it in detail and be able to dig out more from what I've put here. But these are some headline takeaways. It's the longer term economic impact rather than either the short term shocks or the public health side of COVID, which is the most significant for the sector. It's the impact on clients that is the most concerning, not so much the liquidity crunch or solvency issues at providers. There is a tentative sense that as of now, the most dire outcomes that could have happened if we rewound to, let's say, March, have been avoided, but we're still closer to the end of the beginning than to the beginning of the end. There are genuine glimmers of hope here, especially on the coordination and collaboration among infrastructure organizations, researchers, data sharing among investors, and the like. But that under any imaginable future from here, there are going to be permanent effects on the provision of financial services to the underbanked. Whether those effects are significantly worse or in some respects better is unclear for now. And that's mainly because uncertainty remains rife, and that's driven by externalities, which is the virus itself. Will it come back? Where will it come back? How often? How pernicious will it be? But also the macroeconomic downturn, collapse in trade, currency volatility, commodities, and the like. And then there's the internal effects. How will the sector itself continue to respond? There is a real opportunity to grasp, respondents think overall, but equally there's a real risk that it undoes critical advantages on client protection, overridden by a risk aversion and a loss mitigation among funders, providers, and regulators to creep in, that many providers, especially the ones serving the most vulnerable, will go bust, leaving consumer finance lenders as the only FSPs left to serve vulnerable segments. There is also the risk of government donors retreating to prioritize protecting their own. But the possibility of leaner, more efficient and more professional providers left standing and supported by TA providers, consultants, funders and infrastructure bodies who've seen what catastrophe looks like and avoided it. So with that, I'm going to hand over to Mayada El-Zoghbi now. For those of you who are late or who don't know her, she's Managing Director of CFI at Accion and former lead for strategy, research and development for CGAP and a very good friend of e-MFP. So Mayada, I'll hand over to you for your thoughts now.
Great, thank you so much, Sam. Thank you for inviting me, and I want to just say congratulations on this massive effort you've undertaken in such a very short period of time. I know you've had many sleepless nights over the last couple of weeks, so congratulations on getting this out. And I feel privileged to be here and to have had an early preview of the work. So I'm going to give some just general reactions, and then hopefully we can have a lively discussion later. So in terms of the challenges that were identified, I have to say that there was nothing in the findings that were surprising. I've been involved in, there's been so many calls, so many coordination meetings among infrastructure organizations, among investors, with the FSPs and so on. And I have to say a lot of the main challenges identified in this report were just exactly spot on to all of the different conversations that have been happening over the last couple of months. Where I did see some differences were really on some of the other areas that emerged from the paper, specifically on the priorities. So for the FSPs and the funders, I didn't find the priorities that different than I would have expected, but I did find the responses related to the regulators and policymakers, as well as the consultants and support organizations, a little bit different than I would have expected. So, and this could have something to do with the respondents themselves. I know that regulators and policymakers are not a major respondent group to the survey. So for me, I thought that what most governments are looking at the moment is really getting cash out the door. Like that is the #1 priority, and you are actually seeing that happen. And maybe in the respondents that came out in the sense of promoting digital finance, but I think what's happening with policymakers, it's more about direct transfers to low-income people and small firms. And I see this as the #1 priority across countries. The World Bank has found something like 126 countries have already introduced or adapted cash transfer programs in response to COVID-19. And I actually think this is actually needed and a great reaction that governments are making. I was surprised that liquidity measures didn't emerge in the priorities. That is what I am seeing on the minds of regulators and policymakers, which is a great thing. I was actually just on a call just last night with an AFI, with some members of AFI on this issue. And we ourselves at CFI are doing a lot of research on this topic because we know that liquidity has been on the minds of many institutions. And while some data is showing that there isn't an immediate liquidity crisis, there is a potential liquidity crisis looming just around the corner. On the other priority that I think that policymakers are thinking about are moratoria. And we are seeing a lot of countries implementing moratoria. Now, this did come up as one of the priority responses, but I think one of the things this is an area that needs nuance because it's not always positive having a moratoria. Actually, we've talked to many microfinance institutions, and in some markets where how the moratoria are being implemented is actually having pretty dire negative effects on FSPs and are not necessarily helping clients in the long run. For example, we've had MFIs in Myanmar tell us that because microfinance institutions were not considered essential services, and there was a blanket moratorium placed on the market, they were not able to lend to critical smallholder farmers, therefore potentially creating a food shortage problem down the line. So we're coming up with a lot of, early lessons on how governments should be thinking about implementing moratoria, which we think should be a big priority. So in terms of the priorities for consultants and support organizations, I was actually also surprised. A couple of reactions. Researching on the impact of clients. Absolutely, it's critical. The thing is that we can't have everybody rushing to research clients. We're already seeing that some markets are maybe over-researched, and there's not enough research in other markets. So I think one of the priorities here is really around less additional research, but more what does the research tell us? How can we use the learning that's already been done from the research, and what does this say for providers? What does this say for policymakers? How should donors be prioritizing as a result of what the demand side research is telling us? So I would actually caution organizations from doing a ton more research, because we already have BFA, we have Finmark, actually CFI itself, we have CAFI. There's so many actors, and then there's of course FSPs doing direct client engagement learning from their own research. So there's a lot being done on that front. What I found missing in terms of priorities from the consultants and support organizations that doesn't mesh with what was repeated throughout this survey links to digital finance. Now, obviously, digital finance, or helping microfinance institutions digitize, is a massive undertaking. And I found it surprising that a priority didn't emerge that TA needs to be given to microfinance institutions to continue along that path of digitization. What you're actually finding, and I'm going to bring up some findings from the CGAP's recent pulse surveys that they've done now, 3 waves of data collection. And what they have found is that actually not that many FSPs are switching to digital channels right away. What you find is most are 40% of MFIs are expanding their call centers, and that's the most that they're able to do. Only a third of MFIs are actually introducing digital channels. And then of those who are, in terms of the number of transactions that are on digital channels, you actually find only 16% of MFIs have over 30% of their transactions digitally. So this is actually, this makes sense in the sense of if you weren't already on that path, it's highly unlikely that you would be able to expand on something that wasn't already in the works. And as an MFI, to start that process now, I think that was one of the comments that you got. This is not a 3-month response. Digital transformation is not a 3-month. It is a multi-year effort that institutions need to make. And so it's highly unlikely that this would be an immediate response to the pandemic. So in terms of the concerns, so I was really pleasantly surprised that client protection and maintaining social mission was ranked so highly immediately after the being concerned with the effects of the pandemic on clients and their businesses. Given that this is a predominantly FSP, mostly FSPs respond more than any other group, I would have expected to see liquidity and solvency. So I was pleasantly surprised that the broader response is that we want to maintain client protection. And I do think that there are going to be new risks that are going to be emerging. We have not yet done a lot of research on this, given the limitations in doing field research, obviously, under the pandemic. But we are already hearing around fraud. We are very concerned around the move to digitization when the client protection practices have not yet been implemented. And we are concerned that regulators don't have the ways to measure risks in market yet, especially related to digital channels. So I thought some of the concerns related to the MFI's closing, related to consolidation of the industry, I actually thought these were spot on. There are going to be serious long-term implications for the players that survive this. And so this is a major concern for us as an industry. Now, in terms of the positive side, I tend to be an optimist, and I really, some of the opportunities that were presented really resonated with me. Again, the digital finance opportunity, this is not surprising at all. This is not new. This is a long-term trend. I just think the issue here is really, this is not a short-term strategy. This is a long-term strategy. It will need a lot of technical assistance. It will need a lot more effort than has already been made. And so I don't see it as, I see it as a long-term change in the market and in the industry, but nothing immediate. The thing that I found really, very positive, it's positive because it is already happening, and it's positive because it's perceived to be an ongoing future opportunity, is the cooperation. So we are seeing an incredible amount of cooperation happening among various stakeholders in the industry. We at CFI have been actually facilitating dialogue among many of the microfinance networks. It's called the Microfinance Coalition. So there's been a tremendous amount of collaboration and cross-learning among the microfinance networks themselves. But then most recently, we've actually started a dialogue with the MIVs directly to try to preempt any of the potential issues that could happen when there is no coordination related to individuals or investors in particular taking individual action that could harm the industry at large. So we're seeing just an openness and a sense of responsibility that is really unheralded, and I anticipate that this will continue because a lot of the MIVs and a lot of the coalition recognize that their fates are tied, and so you are seeing collective action as the way forward, and so I see that as incredibly positive. And then, as you mentioned, this idea of building back better, I am incredibly excited by this. I do believe that as an industry, we've been perhaps too focused on the quick wins. And what that means in terms of the digital transformation agenda, it is basically the quick win of digital credit, which has basically meant a lot of consumer credit, short-term consumer credit, which I don't believe is really what will help customers in the long run. We know that digital credit is needed. Consumer credit is needed. It is one way of people managing their liquidity, managing their money, but it is not really about the long-term livelihood of low-income people. We do need investment in the things that matter, the things that help people adjust their livelihoods in light of all of the various challenges that they're facing in the market. So we hope, and I really truly hope that this pandemic will allow providers, policymakers, support organizations, and many others to think about, well, what are the financial services that really do matter? How can we think about insurance and other protection measures that can actually help to serve as a safety net for things of this nature, whether they're as large as this or whether they're smaller, natural disasters. We do need to focus on the real economy. We need to help people sustain long-term livelihoods, and so I do hope that this gives us an opportunity to do that. I know there's lots more to say, so I'm going to stop here and hope that we can continue in the Q&A, and I'll hand it back to you, Sam, for now.
Thanks very much, Mayada. There aren't any questions in the Q&A at the moment, but as I said before, I encourage you to please write them, and then either I'll answer them, or if you raise your hand, then Gabriella, who's the host of this, can unmute you and you can ask them. In the meantime, before some of those come, I'll come back to you, Mayada, on a couple of things you said. On the last point, you were toward the building back better. Do you think that, in a sense, this disbands what's been a long-standing myth of microfinance that that is away from the old founding myths of women selling tomatoes and that all microfinance is for micro enterprise, productive lending. And it's obviously been a shift towards consumption lending. In a sense, are we going back to the future here to where it was always supposed to be?
Yeah, that's a great question. I do think to a certain extent we are going back to the origins of the industry, and I think, like I said, I think we've been you know, not taking the easy path, but in some ways, possibly, I think that the rigidity, I think we were very focused on what works based on the early wave of innovation. And I think we got complacent as an industry. So I do think we needed to be pushed a little in terms of continuing to innovate as an industry and not just relying on the disruptors, the new players to cause that innovation. So what I do think that microfinance institutions have is their knowledge of this low-income people, their knowledge of micro and small enterprises, the informal economy. I do think that knowledge should be used to actually create the next wave of innovation to serve those segments. And so, yeah, we are going back to the future in a sense. I think it's already been happening. Maybe it's not been getting as much attention as the fintechs or the platforms, but I think it is happening, and we would love to see more of that represented in in the public sphere. We want to see more research and more evidence on what's been happening there.
Right. Oh, we've got a couple of questions coming in. So this is from Nick Brown, and it says, I think this is really to you. The most difficult component to digitization is interoperability, something that is almost impossible for any but the biggest MFI to accomplish on their own. It must be done by an independent entity in a visa type of model. Is this where this new level of collaboration could have an effect?
Yeah, it's a interesting question. I mean, there's a lot of people working on interoperability now, actually. I know that in the early days, IFC did some interesting market facilitation that actually allowed a lot of private players to come around the table and agree on a set of rules that enabled interoperability. So I don't necessarily see interoperability as a need to develop new infrastructure. I do think it is about facilitating, nudging. There is a role for the regulator to play. There are roles for different stakeholders to play. So I honestly, I don't see it as the biggest bottleneck in a market. I do see it as a bottleneck in a market. It's an important one, but it's not the only one. So yes, there's a lot of different models. There's not just one. I know for a fact that the Gates Foundation has been pushing this very, very aggressively, and has a solution that they are talking to a lot of governments about. So I do think there's a lot of actors out there trying to solve this problem.
Right. We've got another one in the chat, and this I think is also, it's closer to you than it is to me on this, and it's from Vincent Van Tuderen at, I think, at Oiko. What would the key necessary steps to move beyond the low-hanging fruit in digital, as just mentioned by Mayada? So yeah, could you expand on how do you get beyond the low-hanging fruit there?
You mean beyond the digital credit, moving into short-term consumption credit to longer term?
I think so.
Yeah. So again, I do think that so there's a role for investors to play here, because I think investors, to a certain extent, are driving some of the investment in digital credit players. But we need information on some of the other models, other solutions out there. And I think, so, as you guys know, we've just integrated with Mix, and Mix is actually trying to solve some of these issues. We're trying to get more visibility and more data out there on other types of providers, and with more data, with more transparency on performance, you might start to see investment capital flowing to other types of, for example, ag finance or other types of less easy financial services. So I do think information and knowledge, transparency has been a key bottleneck for helping the capital flow to where it is needed. Digital credit is the most similar to microcredit, the old style microfinance driven microcredit. And therefore that's where you're seeing a lot of the capital flow. But in order to get it to go to the other areas, we do need a little bit more information in the market.
Right, and I mean, so much of the low-hanging fruit is on the client-facing side of digital finance, isn't it? It's just, as you say, taking a microloan and then doing it in a different way, rather than the harder stuff, but which may yield more benefits at some of the back end, the institutional transformation. We've got a couple more questions here. This is from Monirul Huck. COVID-19 is pushing MFIs to adapt to the changes that were due before. While this is the bright side, currently it's tough to adapt with the liquidity crisis. So the question is, what can be done quickly to push the necessary adaptation, including digitalization, resilience building for clients, for example, insurance and innovative process keeping such crisis in mind? So the question is, what can be done quickly to adapt, including digitalization, to deal with the liquidity issue or build resilience? I'm not sure. Right. I'm not sure I paraphrased that very well. So if not, we could move to a different one if you like.
I mean, so I do think this is one of my comments earlier was around we will need more technical assistance to support the digitalization process. I do think that is something that the funder community, the donors, probably need to be thinking about. There's only been a handful of donors that have actually been doing this. So this is an area where there does need to be more dedicated resource. And we know that especially small FSPs cannot afford to do this by themselves. So I see two possible paths. One is you start to see consolidation where some of the smaller entities come together and look for shared infrastructure. Or there's a very large influx of TA funds that support some of these institutions to do this quickly. Mm-hmm. I don't know if it completely answered the question, but it at least gets us started.
Sure. There's a question to me from Lena Hansen. She says, how do we start or enlarge the dialogue with the informal FSPs who are often the fallback for clients in situations where formal FSPs are challenged? How can we direct the compass and the information sharing promoted by CFI to include more of them, those informal FSPs that clients may need to rely on? That's a great, as the industry consolidates, that's a great question. I think there are probably three responses to that. One is we need to get better at using the networks and the associations that do work with those tier 3, tier 2, and more informal providers, cooperatives and the like, to get the information to them. That's something we can definitely be better at. The second is on the Compass specifically, we're also publishing it in French and Spanish this year, not just English. So that will definitely increase the audience. I think the biggest thing though is actually one of the maybe unforeseen but positive outcomes of COVID is the increase in connectivity and people's comfort in platforms like we're doing right now for information sharing. And while the endless webinars and Zoom calls maybe, make everyone's eyes want to bleed after several months of doing so, there are real opportunities that come from it, including being able to talk to branch managers and loan officers in more remote providers serving the most vulnerable clients, and to share this information with them. That's something that over the next months we'll be trying to do. I know CFI likewise. So I think we're at the cusp of a revolution in how we can increase communication between infrastructure organizations and researchers and TA providers, not just to the big tier 1 FSPs.
Can I just jump in and say one more thing? So for an organization like CFI, given our inability to travel and our need to do research differently in the future, I do think we're going to be looking to partner much more than we've ever done in the past with local organizations. So I do see this as an opportunity to have more information in local markets, and that becoming a priority for us down the line. And I anticipate if this is happening to us, it's probably happening to many others. I wonder, Sam, if I could ask you a couple of questions, or whether you want to continue.
There's sure. We've got 10 minutes. There was one more. There was a follow-up from Vincent. I don't know whether you want to take it. If not, we could do this offline. But it was about what are the priorities of donors, i.e., separated from investors, towards digitization, because TA can only be funded so much by investors. What's the role of donors?
Yeah, no, I
Yeah.
think it's a great question, and as I was mentioning, there aren't that many donors. So a lot of the donors. So I used to work, of course, at CGAP, and I was very involved with the donor community, and I can tell you that a lot of the donors believed that we had achieved our goal with MFIs, and that MFIs were no longer needed subsidy, and so they then moved on to the next thing, right? And so you don't have a lot of donors as heavily involved in the core microfinance industry anymore, and so there is a need for us to bring them back in. And one of the things I've been in discussions with Greta Bull at CGAP, and we've been talking about what do donors need to actually come back to this industry, and information again is the key, and that's one of the reasons why CGAP decided to invest in the Pulse survey, because they felt that without information on what's happening in the industry, what are the risks to the providers themselves, what are the potential losses that decades of investment that has gone into the industry, what are these losses? Without that, we would not be able to make the case for donors to come back in. And so that's where we are today. We're not seeing any international donors coming back yet. We're hoping to continue to engage and make the case. What's interesting is, being based in the United States, it's actually the opposite reaction here. In the US, the number of foundations and donors who have stepped up to support local financial service providers that serve the low-income consumers is really incredible. And it's interesting to see this disparity between kind of the domestic side here in the United States and kind of the international donors. But I do think it's because the information flow is not yet there for them. And one of the unfortunate trends among the donor agencies is that they have lost a tremendous amount of staff. There's been most donors no longer have specialists in-house, and so making the case to this new type of generalist who may not know anything about this industry is a little bit tougher than it used to be. But we do need to make that effort.
Right. You said you wanted to ask something.
Yeah. So I talked a little bit about what surprised me in the results, and I know you were very, very deep in all of it, but I just wanted to know if there was anything that stood out that surprised you most. And then linked to that is that in light of what you saw, do you wish you would have asked something differently, or you wish you would have is there something that you would have included that you didn't include in this round?
There were a few things that was, I think, like you, I was fairly unsurprised by the challenges, scores, and comments. Where I was surprised were also in priorities. The cutting costs and cutting OPEX was one of the priorities for FSPs, and it was ranked bottom out of a list of 17, no less. And how is it that when so many are facing still a liquidity crunch, can so many FSPs see the sort of that side of things, cutting costs, reducing OPEX, as such a low priority? I think the explanation there is probably that we ask them to look 6 to 12 months ahead, and maybe we can infer that they think that by then the reductions that would have needed to happen during shutdown now by then would be back into actually increasing, investing side of the curve, and maybe maybe in fact, and this answers your second question, in retrospect, I probably would have liked to add a priority there, which is the inverse, increasing OPEX or something like investing in people and services, and see where that came. It's quite possible that would have come very high. There were other things that were surprising, you know, as I said before, that funders rate their own financial losses as a very low challenge. The clear client centricity on the concerns section. I mean, I was pleased to see that, but I was a bit surprised. You said before you were surprised that TA to MFIs on digital didn't come up as a priority, and the reason it didn't come up as a priority is we didn't offer it as a priority, and that was, I think, partly because digital was well represented elsewhere, but I suspect had we included it as an option, it would have scored highly. So that's a failing on the methodology rather than the responses there. The other thing methodologically is, as you know, we made all the quantitative sections mandatory. In other words, you had to complete every item of one section before you could move on to the next one. That meant there was a little bit of a drop off as you go through, because people, you know, after a little while, there's a lot of clicking, but that may have meant that people who had really interesting things to say on concerns or opportunities, or on opportunities for TA providers, etc., didn't get that far. So in retrospect, I probably would have chosen to make it all optional and just deal with the mess, right? We've got a few more minutes. A couple more questions, and I always want to try to answer attendees' questions where possible. One of the that's more of a comment. One of the COVID-19 consequences might be market intervention of populist governments in direct loans, creating additional future problems for MFIs.
Yep, it's always there. And so I totally agree that this might be something that will happen. The thing is those kinds of measures are often short term. You know, they don't last. Those kinds of institutions that are created often fail. And so I would just say, you know, we just have to wait it out.
Mm-hmm. There's a question from Nala Deeb about maths and researching, and I think she can probably answer this better than I can, because I think she is a researcher. But do you think that mathematical modeling may be a new model for researchers to implement new strategies for MFIs? It's a challenge also to propose new modeling, taking into account the interaction between all actors in the market. I don't know. I don't know if Mayada knows much about new frontiers in data modeling.
I can just say that everyone is very interested in having a sense of what the future holds. And so there is something around doing scenarios related to linking how COVID will play out in a market, whether it's a 6-month crisis, whether it's extended, whether there's a second wave, and so on. There is interest in people are calling it financial projections, and the question is yes, you know, typically this is done at one institution level, but honestly, one institution at a time is probably not feasible. And so it would be very interesting to look at this at a market level. And I would, if people have the capacity to do some kind of modeling like that, that would be I'm sure very interesting for the investor community. It is like the number one ask among the investors. They want to get a sense of what will happen. How should they be thinking about their response in specific markets? And so they are looking for these kinds of this kind of information. So that would be very interesting.
Right, thanks. We're at the top of the hour, so I want to say thank you, Mayada, very much for taking the time and for reading. I sent Mayada the full paper several days ago, and she read the whole thing. I really appreciate that. And all of you for attending, to the e-MFP team, and of course the respondents to the survey. I've seen a few names here of respondents who joined the webinar. The paper's in layout at the moment. It'll be published in the coming days or so. So keep an eye out for that. If you aren't already, please subscribe to the e-MFP mailing list. You'll get notifications of the blogs and launch announcements, and on the social media too. It's also being done in French and Spanish, as I said. That will follow a couple of weeks or so later. And thank you all for coming. I hope that when you do get the paper in your hands or in your screens, that everyone finds something useful from it. So thanks very much and have a good week. Bye.
Thank you, Sam, and congratulations. Bye-bye.
Thank you. Bye.